Hey guys, welcome back to our channel. It's the Pair Entrepreneurs here. So today we'll be continuing our series of investing with Mac. So we will go over technical analysis, and if you have not watched the previous video, I highly suggest you guys go watch it because it's all gonna make sense. So I'll be focusing on a high risk investment or trading specifically on penny stocks. So if that makes sense, then let's get started. So as a disclaimer, I'm not professional financial advisor, and this is just for educational purposes only. And if you're looking for professional advice, to seek out a registered financial advisor. All right. Perfect. All right, guys, so we'll be talking about 4 bearish candlestick patterns today. So the first pattern that I wanted to talk about is the snore pattern or the Snorlax pattern. So this stock pattern is boring as it doesn't do much. They have very little liquidity and there's no discernible pattern. So I would advise to keep a close eye on this, but do not play as you will get stuck very quickly. So only play this once you see patterns that I have mentioned from the previous video. Alright, so why does this pattern occur? So this pattern can occur because of lack of movement of share price and no big news or hype. So this is like a sleeping Snorlax, like with the Pokemon that I was talking about. You will need a lot of patience to make money on this, but as a short-term investor, I would avoid this pattern. Alright guys, so here's a photo of BLGV that is showing the snore or Snorlax pattern right now, and you can see here that it's not doing much and there's no discernible pattern. So take a look at this and try to avoid it when you can. Alright guys, so let's move on to the next pattern. So the next pattern is called the 3 black crows. So what is that? So this is another bearish pattern that you will commonly see when you see a reversal uptrend. The black crow pattern consists of 3 consecutive long-bodied candlesticks going down. If the stock gradually sinks lower and lower in price, then we call this the crow pattern. So where it picks away at your investment like a crow picking at a carcass. So if you see this pattern, you will need to cut your losses right away, or you will lose more money over time. So be careful with this because this is a pattern that a lot of people don't realize and they lose a lot of money. So why does this pattern occur? So this pattern occurs because of continued selling pressure and brief spurts of price strength met with heavier selling pressure. So often this happens if somebody doesn't believe in the company or a release of bad news that is very big, and a lot of investors or traders get scared of this. So you need to pay attention to this and tune in to current events. So here's a photo of ACB showing the 3 black crows, why you should avoid it, because you'll see here it's freaking crazy, right? You'll see the black crows in a spurt of uptrends, then it goes lower and lower. Right now ACB is trading at $6.59 Canadian. So be careful with this. Alright guys, so the third pattern that I wanted to talk about is called shooting star. So this is another bearish pattern with a long upper shadow or a wick and a small real body near the low of the day. So this happens after an uptrend and usually indicates that the bulls are losing momentum and the bears are taking over. Right, so why does this pattern occur? So this pattern occurs because the bull were very active early on the day, then later the bears took over. So once a trader sees this confirmation, the selling pressure starts and the red days begin. It's very important to detect this right away because if you are long, you need to cut your losses right away or very quickly. So here's a photo of Supreme Cannabis, and you can see here after the shooting star pattern, it keeps going lower and lower, and you have to watch out for this because this is the beginning of a red day. Alright, so the last pattern that I wanted to talk about, or the fourth pattern, is called breaking support. So a lot of traders play the support and resistance pattern. So think of the resistance as the ceiling and think of the support as the floor. So when the floor breaks, or in this case the support, the stock price drastically goes down because a lot of people are scared and they want to either take profits, or short sellers are taking advantage of it. Okay, so why does this pattern occur? So this usually occurs because traders commonly use this support and resistance pattern. It becomes a self-fulfilling prophecy as trader confirms the pattern, and when all hell breaks loose, short sellers take advantage while longs panic and cut their losses. Okay, all right guys, so here's a photo of Namaste when the support broke, and you can see here that it tested the support a couple times, then eventually it broke. So be careful with this, very careful. Alright, so those are the 4 bearish patterns that I have seen prominently when trading, and I guarantee that you will see the same thing or something similar when you're trading. So I'll share my screen with you quickly on how you can avoid losing almost 100k in paper loss by understanding these patterns and avoiding them. Okay guys, so check this out. It's very important to learn from my mistakes so that you can avoid them too. So I held on to these stocks for long, but I shouldn't have. So learn from my mistakes guys, it's very important. So I'll just scroll down here. So we will go to one of our investment accounts that has almost 100k paper loss. So let's let it load and I'll show you guys here. All right. So you can see here that ACB is down 4,147 and 20 cents, and BLGB is down 5,694 and 90 cents, and Canopy Rivers is down 86,365 and 30 cents. So that's freaking crazy, right? So guys, that is almost 100k paper loss. So it is important to know when to step in and when to cash out. If you don't, then you will be the 90% of traders that lose. It's very important to study hard and have a system in place when going into a trade. Okay, so hope you guys learned something new, and that is an informative one. And happy Thanksgiving, and see you guys in the next video. All right, take care.